2020 was a challenging year for most industries, and FinTech was no exception. Impressively enough, global investment in FinTech bounced back strongly in the first half of this year, hitting an astronomical $98 billion with a record number of deals. So what are the largest FinTech investment deals, and how did FinTech manage to bounce back so quickly? Good morning, everyone. This is Merrick from Payment Genius. Today, it's all about payments. Following a sticky COVID-19 hit, investments in the first half of 2021 was up $12 billion from the same period the previous year, with deal volume hitting a record of nearly 2,500 deals, surpassing the previous record of 2,390 deals back in 2018. Proving that fintechs are capitalizing on the spike in e-commerce and digitalization following the outbreak of the pandemic. The largest VC round in 2021 included Robinhood with $3.4 billion and Klarna, which signifies the attractiveness in both the lending and stock trading sectors. To say that Robinhood has been faring off well leading up to its massive $2.4 billion investment in February might be an understatement, and we can clearly see that by looking at their quarterly revenue trend. Aside from receiving 2 out of 5 highest fintech investments in 2021, it appears that the stock trading app has been dominating the crypto and stock trading apps for 4 years in a row, with the app surpassing 3 million monthly downloads. Additionally, Robinhood experienced major adoption surges in the first 2 quarters of 2021. Next on the list of the highest fintech funding is Klarna. The infamous and fierce buy now pay later solution provider secured $1 billion in funding only in the first half of 2021. Not so surprisingly, Klarna surpassed its direct competitors by 4 million downloads in December of last year and is also among the top 10 most downloaded shopping apps. Following the outbreak of the pandemic, investment budgets were slashed in most industries, but not so much in fintech since investors have retained their confidence in the sector. The industry's maintained growth and consolidation might just be the biggest driver behind this retained confidence. Surprisingly, although Brexit seems to have contributed to a 9% year-over-year drop in funding, the UK retained its position as the #1 destination for fintech investments across Europe. Not to mention that consolidation has been an ongoing theme in the industry, and the aftermath of the pandemic further fueled this trend. The accelerated pace of digitalization we saw in every aspect of our personal and business lives is another reason why the fintech industry as a whole has contributed to attract investors. As most of our activity defaulted to remote, fintechs that cater to this new paradigm saw immense growth. In Europe alone, fintech app users grew by 72% in the direct aftermath of the pandemic outbreak, while the top 7 digital banks in the US grew their cumulative user base by 39%. Since the start of the pandemic, the fintech industry had an impressive rebound. Going forward, with the growing size of fundings, regulators are likely to impose investment restrictions, which could somewhat hinder the pace of consolidation. However, the industry seems to be ahead of the game, with some players focusing on incremental investment in their strategic partners that are more likely to get the green light from regulators. Visa's strategic investment in Klarna is a great example many other legacy players could try and emulate, as they strive to maintain their stronghold over the industry. Aside from the stock trading and lending sectors, which sector will likely undergo massive growth in the rest of 2021 and beyond? I believe blockchain technology and the crypto space will continue to evolve, but we'd love to hear your thoughts on the matter. So let us know down in the comments below. If you like this video, don't forget to like and subscribe for our weekly fintech news and insight. For now, I'd like to thank you all again for watching. I'm looking forward to see you again next week. Cheers, bye-bye!